Hi, welcome to the Market Alert for Monday, 30th of September 2019. So let's have a look, see why Bitcoin is making the news. Tumbled below 8K on Friday and has continued lower overnight. So what I've done here is actually load a weekly chart so we can get a good idea of where we are in the bigger picture. You need to know where you are in order to trade anything intraday. You have to step back and have a look. We have the low back in December 19 and also the high there in June for Bitcoin. And what I've done here is put in some retracements. I wouldn't normally use 50% or 62 except in weekly charts, much preferring to use the 76. But when you want to gauge the sort of longer term trend of the market, it's worth looking at these other fib retracements there. Excuse me. So what we're seeing here is prices heading towards the 62% level there in the weekly chart. So keep an eye on this. In the daily chart, you can see that we're below the 200 bar moving average, and we continued through this overnight, heading down towards the 7435. And in the 4 hour, you can also see that we're finding a bit of support from the low of last week there at 77.36. Now, fortunately for us, because we can go long or short, what we're after is movement, and that's all I'm concerned about. Is a good risk-reward trade and lots of volatility, whereas if you buy and hold, then of course you're hoping that things are going to turn around and go on to make new highs. But by trading this way, it does allow you to get in and out of the up and down moves of the market. So this is yesterday. I don't normally trade on a Sunday, but what I wanted to highlight here again is the how the market comes back through the 200 bar moving average. We're already through on the 4 hour and the daily, so the short side is the best side, and by using the 200 bar moving average, you can see that here that prices came through, they rallied back, they then turned around back below the 20 bar moving average as well. Then they retraced a double top situation there, you can see there, failing to close back above the 200 bar moving average and then moving to the downside. And that's the sort of trade that I'm looking for, where I know that there's this repeatability at the 200 bar MA. And if you look across here overnight, the market trades back up to this. It's like a magnet, and then moves lower, and then has just had a shakeout in the last couple of hours, and we can see prices sideways and a bit of buying coming back into the market. So what we can do here is wait for the market to rally back and then do the same, because ultimately this market is still short. It's still in a profit making phase of its pullback, and as it says here, don't panic. This is still considered a pullback and nothing to worry about in a big bull market. And this article goes on to explain the repeatability of these pullbacks over the last few years and how the market goes on to make its new highs. But we don't have to be too concerned about this, because we can just measure this in the weekly chart and also take advantage of prices moving to the downside before they then move back up in a resumption of the bull market, if that's what it chooses to do. Just trade what we see, not what we would like to see there. Meanwhile, in the stock markets, Friday stock sinkers, trade tensions, Trump Fed's open mouth, and market operations. What they mean by the open mouth, obviously they've wheeled out the Fed members, and it's not looking good for the stock market. I said this on Friday, and again I would reiterate this, because the market moved lower. We can see an increase in volume. They managed to pull it back before the close, bringing it back above the 76% retracement. The market's opened slightly higher, but is struggling. And it's a case of rearranging the chairs, deck chairs on the Titanic. This is just do whatever they can to hold it up until they can no longer do this. Certainly heading for recession. The 3 to 10 month yield inversion is more or less a guarantee that that's going to happen. As I've said before, we've had recessions without the yield curve inversion, but we've never had a yield curve inversion that hasn't seen a recession follow. So on Friday, you can see there the market trading down to the 200 bar moving average. It finds support and moves strongly back to the upside to where the high was made in the pre-market session. We can then see we've got prices coming back up, and then all of a sudden news was hit about no trade deal with China, the usual BS, and this sent the market into free fall over 150 points in one bar. And then what we've got here is we'll see the market come back. Now there's no high and low to mark off except off this bar for retracement, so I'm just going to click twice at the high, and you'll see the 76% retracement there. It comes back to all of the three averages there, real resistance for this market, and then prices move lower. You can see here we've got a bit of a bounce, but the market remains below the 20 bar moving average until we get down to this point in the trading session. Let me just select the move tool, and you'll see prices putting in a bit of a 76% retracement from this low to this high, and then we get some assistance from the plunge protection to bring the market back. Overnight prices have gapped higher on news, China news again, and again back gapping up above the 200 bar MA, and then closing below. There's definite weakness in this market. Like I say, they'll do whatever they can to bring the market back. Prices sit on the DP level there, close back above the 20 bar moving average. They close back, and then eventually you see green bars coming in to move the market higher. We get a green bar going through the 200 MA, and then prices have stopped. They've stopped at 76% here so far on the overnight, back below the 20 bar moving average, back below the 50, and now back, as you can see here, to the 200 bar MA. It needs to hold here. Failure to do this will see the DP hit, and then prices continue down to the close, the low of last week, and also the S1. So a bit of support there at the moment for the pound. What news have we got to do while I'm thinking about it? We've got the current account for the UK. This is forecast to have reduced. We'll see. But to be honest with you, the pound is more concerned about what's going on politically than it is economically at the moment with regards to Brexit. Does I get the right chart? Just one second. And start off with the daily chart. Pound starting to weaken as we head towards the 31st of October, first tomorrow. Worries over no deal Brexit and all of the shenanigans and everything else that's going on. Like I say, I don't really take any notice, more interested in what's going on in the economic side of things. As I said before, Europe is already a financial basket case, and the only thing that I will say is they will not let us leave, not without a fight, that's for sure. And there's a good article actually on Zero Hedge I noticed this morning as well. Let me just find this for you. So here you go. Like I say, don't want to get political, but this article caught my attention. Stopping Brexit is about saving the European Union, because make no mistake, losing the UK from the EU's budget would be catastrophic for the EU, staring at a massive capital outflows as helicopter money happens and bond yields reverse from their current bubble levels. And of course, from the 1st of November, when the convicted criminal Christine Lagarde takes over at the European Central Bank, they're going to start printing 20 billion a month, and they've already taken rates more negative. And this is the crucial bit here, and this is what, while everybody's being distracted with the political side, the current bond yield, bubbles in Europe, when they start to collapse, it doesn't need us to leave. It's going to die of its own natural failure anyway, but it's interesting to actually read these articles, get a different perspective of what's going on. Like I say, politically, I couldn't care less. But I've said for years that it was purely an economic experiment, and it is an economic disaster, frankly. And it will die on its own sword, personally, looking at the figures. But anyway, back to the pound, already below the 200 bar moving average, which you can see up here. The market then breaks through, obviously some sort of news there, and then it's the bounce back. And again, we've got the repeatable pattern from the low to the high there, 76% retracement, and we get the bounce back, and then the market back through the average is short at the moment as the market's through the 200 bar moving average, and then just trading sideways to lower here. See their prices just in a bit of a sideways range as the markets start to open there. Okay, a few other things. The implied volatility, well, interesting here because prices have closed below the 20 bar moving average in the daily chart of the Dow. Let me just show you this here as well. You can see it's just there, and this being the case, we've also got prices closing above, well, still closing above the implied volatility 20 bar moving average, and this is why I'm warning of potential corrections. You won't have to go back and look at the previous ones where this has been the case. The first red dots are where both are in sync, and then you'll see the corrections in the market. So watch out for further weakness. And here we've got an increase from 1484 to 1532 on Friday as well, showing that there is uncertainty in the stock market. 10-year yields continue to remain inverted. We know what's coming from that. And Deutsche Bank, an interesting one here. Let me just close this and this. We're below the 200 MA once more, and there's the 640 area that is crucial for this market. So we'll see how this pans out as well. Okay, that will do it for this one. A lot to cover this morning. Let's see what happens. No news as such to move prices, but I'm sure they'll have news to move in any direction, whether it's a tweet from Trump or trade news, Brexit news or whatever, which is great. And long may the volatility in the crypto markets continue as well, and also increase. Okay, that's it from me for this one. Thanks for watching. See you in the next one.